Greetings. Tesla's earnings and call come out in the good to mediocre zone, which I think results in a severe beatdown, perhaps of the 20% nature, over the next couple of weeks for Tesla. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show and would like more ideas on investing and trading, we wanted to encourage you to join us. I wanted to make this first an alert. After seeing what Elon and company had to say after the earnings report, I'm reminded by a friend of a whole Charlie Brown thing where sometimes when someone is speaking, you hear mop, 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 instead of actually listening to what the person is saying because you're so enamored with it. So in this earnings call, there are only two things that I wanted to figure out. Number one is what is happening entirely with the growth. So Tesla's stock price, like any, depends on the growth of the company. What is the growth in demand like, and what is the growth in production like? So if both of those are in a heavily positive direction, that's where you get nice movement of the stock down or up. If both of those are in a negative direction, that's when you get the stock price moving heavily down. So even though there are a lot of other things covered that we can deal with as we go forward based on new information that we got, I'm sort of laser focused on those two because those two are going to be the primary things that affect how the market reacts to the company and the stock over the near term. So what basically happened was it kind of came out, number one, Tesla is having production challenges. Yes, we see growth in China. Yes, we see growth in Fremont that is incrementally attractive. The problem, though, is the reason why Tesla opened up factories in Germany and in Austin is it diversifies the location where production is being done, and it shortens the delivery time between customers and Tesla. So if you'll notice, for the last couple of weeks, there have been images of as many as 10,000 Teslas sitting at the port in Shanghai waiting to be put on a ship and moved. And the question was, like, why are they sitting there? Because this has been happening for the last several few weeks. And the answer, according to Elon, is they've run out of ships that are able to transport those cars. So the challenge right now that Tesla has is cars are produced but can't be delivered because trains and ships to move those vehicles have been in short supply. I actually think it's a really bad idea for him to reveal this because it encourages competitors to potentially put vehicles in motion that can exacerbate this problem for Tesla. What is the solution to this? Really simple. All you have to do is produce more cars in Austin and primarily produce more cars in Berlin, and this whole issue is a non-issue. And that's where we see problems. So I've sort of messed up the order of things, but in general, we're supposed to look at, well, number one, how is production going? The answer on production is meh. Yes, both we got 85,000 vehicles coming out of Shanghai. Yes, we got more vehicles, we don't know the actual count, increase that came out of Fremont. But the challenge is that the focus is no longer on those two. The focus is on the new factories and the fact that they're bigger than the old factories. And so the answer there is, Elon indicated that we're now up to 2,000 vehicles per factory approximately. Well, this is great, but the challenge is that you have call it a $4 or $5 billion facility times two, and let's say for giggles, they're producing 300 to 500 cars a day. My assessment of this whole thing is because of the size of the factory, number of employees, number of departments you have to open up in order to produce a vehicle, the break even for Tesla is somewhere between 700 and 1,000 vehicles a day. And we're below half of that. So what this means then is we have two factories that are critical to the process of growth because they can help you produce more and produce more closer to customers, not requiring more shipping, etc. And these factories are underproducing. And Tesla, or Elon, has made two statements. At the 1,000 per week production level, he referenced the two factories as money furnaces. And after saying they were money furnaces at 1,000, he's now saying, hey, they're doing 2,000, but he didn't discuss the fact that they're still money furnaces, but they are. And the amount of money being burned is increasing because now you have the problem of, with those facilities not producing at some kind of scale, 5 to 10,000 vehicles a week-ish, you now have this other production problem of too many vehicles being produced that are a ship away from getting cars to customers. So our production increases are struggling as a result. And so, hey, we got a problem, which is the problem is we should be producing enough closer to the customer so it's no big deal. You throw them on a train in Germany, they can get to the rest of Europe, or maybe a short boat ride. But if you're still relying on China primarily to service Europe, which is borderline half of your demand, it screws up the whole process. So we have a production problem that I think will be solved pretty quickly, but Elon didn't seem to give a timetable for us to get to scale production that doesn't result in these facilities being a money drain because they're losers, versus even getting to break even or a profit, at those larger numbers. The other problem that's popped up here is Elon articulated that through the numbers, demand, and sales, we're actually starting to see the backlog disappearing. So as you'll recall, about 3 weeks ago, or for the last, let's say, 2 months, every 2 or 3 weeks, there's an update of the time between order and delivery, particularly in China, of a Tesla vehicle. And we've gone from a backlog of as much as 6 months to get your vehicle to as short as 25 days after you order, you can get your vehicle. So the question is out there as to, well, what does that mean? Does that mean that, what happens to production if in China it's a 25 days to delivery or from order to delivery? This actually suggests that perhaps demand has collapsed, driven by the lockdowns as well as the recession that China is experiencing with real estate, etc. And the answer is that's entirely possible, but I kind of feel like it's no big deal. And the reason is that in certain places, particularly Australia that I'm focused on, they've got backlogs that are long and they have a lot of demand for cars and they can't get them. And they can't get them, as we know, because of the shipping issues that they're having, etc. But I do believe that there is still a large number of pockets that are out there. Another question mark that's in the back of my mind is, what about the Hertz orders? So Hertz is a global company. To compete with them, there are other auto companies that are now putting large orders into Tesla. And one wonders, well, wait a second, should you delay those orders, let the customers get theirs first because those aren't going to disappear? And now you have this pocket of demand you can fill out as all the customers have been served. This is an interesting process because Tesla has been handing off cars to both customers and the Hertz type customer, if you will. But I think that, there's one customer, the rental car companies, that aren't going anywhere. There's another customer, the real customers of individuals, that can potentially disappear if the recession hits them hard enough. And therefore you don't have that profit and revenue going forward. And so by delaying the Hertz of the world companies, you now solidify those sales that might disappear while the rental car companies are going to be, still waiting for theirs. This hasn't been the case in terms of process, but I wanted to kind of bring it up in general as something to think about. So overall, I'd have to say that there are, instead of flashing green lights on the production side as well as the demand side, based on Elon's assessment of recession and their types across the globe, he sort of articulated that the backlogs in the US are still there and the demand is still there, particularly because the recession isn't that bad. But both Europe and China are experiencing softness. So getting back to our discussion of growth and how that hits certain stocks, particularly Tesla, I think what this means is that a lot of entities that are Tesla fans, including us, are now in a position where, well, what's going on here? Does that 25-day backlog versus the 6 months to a year that we've had for a long time mean that sort of the Tesla gain has changed? What adjustments should they make to the growth of the company based on what's going on with both production and its growth, as well as what's going on with demand? And I believe that once we get to our 3-day and the analysts have a chance to digest all the data they got from Elon, I do not think that the Tesla stock price holds up here. As you saw after market, the stock actually fell 5%. I believe that we have a downside risk currently of somewhere between 10 and 25% on the stock price based on the newest news that we just received. And so if you are an investor and you have shares, I would try it, maybe not outright selling, but I would seriously consider hedging your position as a way to prevent mega losses as this whole thing plays out. I'd say the other thing I was surprised by is that Elon is a really smart guy and understands how analysts operate. And I was just very surprised to garner a sense of lack of urgency on his part. Both he and the management team kept referencing the fact that investors should not be focused on the short term and should be anticipating how growth looks headed over the next 2 or 3 years. And I have to say that you always want to be a long-term investor. The argument I would make against this is that there are steps that one uses to get to that long term that seem kind of logical. Like, I have a question that I keep asking, perhaps that I'll close with, which is China went from building a factory, starting the factory, to production of vehicle in January to a run rate of perhaps 300,000 vehicles a year in 9 months. Both factories that are now new are 2.5 years in creation, and we're now heading towards 9 months into production, and we're barely at $2,000 a week in terms of production. So something screwy is happening here that I don't understand, but I'm hopeful that somehow we can get better answers, because those better answers will result in more confidence in how everything is running. But for now, I think this could be a very ugly period for Tesla stock and those who hold it, and I wish you the best of luck in this space for those reasons. At any rate, we look forward to your comments on all of this. This is Greg for Teslafaninsight. Our health tip as a reminder is don't forget your 25 leg lifts a day to make sure strengthening quad muscles. I also wanted to remind you of back bends every day, 3 times a day, to allow stretching of your back rather than forward as you sit backwards in order to give your back relief. And I've been using this daily myself, and it's totally awesome. At any rate, this is Greg for Teslafaninsight. Tschüss, au revoir, lehitrot, choda hafez, strasiche. Have a great day, and bye for now.